at $112, $113 until Thursday. Now the market's back up in oil about $1.25 on the day. So I do believe that we are heading right back up, but I don't think it's going to be like we saw over the past few months where the markets went parabolic. I think, and I much prefer to see a market move on a more steady basis. I don't like to see where a market goes up from $30 to $50 in just a couple months because, again, it showed that there was short covering and that the banks were getting out of their short positions or buying back their short positions. Again, but we don't like to see that tremendous type of volatility. We prefer to see a much more orderly market, and that's what I believe we're going to see between now and the end of the year. So again, I think that we should be taking advantage of silver at this ridiculously low level when only, a week ago we were talking about it breaking the $50 level. The U.S. dollar is going to continue to fall because the Federal Reserve is not going to raise interest rates in the United States for at least 2 years. The reason that oil prices are so high and that the U.S. stock market is high is because the U.S. dollar is weak. And basically European investors and South American investors can buy a cheap stock market because our U.S. dollar is so cheap. But the risks in the market at this level are extreme also. And as we go into the summer months, again, when the trading is very light and the volume is light, you better watch out for the stock market also. So again, I think that we're very close to the bottom of the silver market. We may see one more drop in the market before it starts to move higher. But again, I'm very bullish on gold and silver. Nothing has changed in any way, shape, or form. We're very bullish on oil, and we're very bearish on the U.S. dollar. So again, at this particular point, I think that the reason that we saw this pullback was not raising margin requirements to get the small investor out of the market. He doesn't represent enough of the market to make a difference. The reason was they don't have enough silver to deliver against the outstanding futures contracts, and if I'm right on that, that is the most bullish news that you could ever get because it just confirms that we have a major shortage of silver, and the fact is that these thieves, in my opinion, on the exchanges just couldn't do the right thing. They had to bring the market down that way because they didn't do the job correctly because they sold more silver than exists in the world.
If you'd like to learn about investing in precious metals, the company that Harold recommends that you use, and when you're talking to them, obviously you should have conversations that include protecting your profits and protecting yourself to the downside. The telephone number, 1-866-623-2002, 1-866-623-2002. People have to remember, we were up in this market roughly 80%. We started the year at around 31, went to 27, and then went all the way up to kissing up against $50. And if people remember back in the summer when we were really pounding the table last summer, silver was $17. Silver went from 17 all the way to 50. And when we have big moves like that, it's probably highly recommended that if you want to protect your profits, talk to Worldwide about having stops in the market. One thing that I thought was very unscrupulous, Harold, and this sort of adds to the intrigue and mystery of this pullback, rather interesting that Business Insider was tipped off to Eric Sprott supposedly selling silver. And actually, Eric Sprott came out and did an interview with King World News and said that they have as much silver as they already have and had in the past. They're very bullish on silver. Nothing has changed. Yet at the same time, you had the Wall Street Journal and CNBC coming out, and they had, and this was a whisper campaign, saying that George Soros and other big hedge funds had sold precious metals, and Carlos Slim was selling his silver positions. So it almost seemed to be a bit of an orchestrated move. I don't know who is pulling the strings behind the scenes, but when you have the Business Insider, you have the Wall Street Journal, CNBC with their whisper campaign, it was very, very fishy, to say the least. Jim Rogers came out this week and said gold, it's going a lot higher over the next decade. It may slow down for a while because it's run up so dramatically here in the last few weeks, but gold's going to be much higher. After this pullback, Peter Grandich, he sold out at around 50, and obviously Peter Grandich, we've seen him on the Canadian Business Channel, on CNBC and Bloomberg. He is back fully invested in precious metals. John Paulson, and he's a major hedge fund manager, coming out and saying gold will go to $4,000. Paulson told a UK news show on Tuesday that gold is going to $4,000. That was reported by the Wall Street Journal. Despite some recent gyrations in precious metals, more so on the silver side of things, the prominent investor remains super bullish for the next 3 to 5 years as the United States and UK flood the market with money. And that is a must-read article that you can see in our newsletter. If you'd like to receive our free weekly newsletter, and this is going to really open up your eyes to what happened in the markets during the last week. We send it out free of charge. It's the companion to our radio show. We send it out free of charge via email every week. The telephone number to subscribe, 1-866-623-2002, 1-866-623-2002. Some other people coming out and talking about silver. It's rather interesting that a lot of people who have actually sold out silver within the last 2 or 3 weeks because it went to 50, are now back in the market. Ben Davies saying we are now buyers of physical silver. A few weeks back, he was actually saying sell silver, and now he is back in that market. A lot of people, Harold, in that situation where they saw this pullback, now they've gotten their positions back again and waiting for the next move higher in the weeks and months ahead.
Well, you bet. Again, and these are very, very smart guys. The fact is that they're looking at things exactly the same way as we are. Nothing has changed in the market. So if a market, looked good at 50 and now you can buy it down in the 30s, then why wouldn't you buy it? So, again, I'm a firm believer. I think that nothing has changed in the market. It sickens me to see when they do these type of things and then they get away with it. Is it possible? Because, again, stops were hit in the markets, and the markets just tend to get a little bit carried away, and people tend to panic. And the worst thing that you could possibly do is panic when you're trading, because the thing is that there should be no emotions to these markets at all. It's logic. And the fact is we got to keep our heads about us when these type of things happen. But, again, if you're not heavily leveraged, then these should not affect you. The fact is that leverage can work for you and leverage can work against you. And again, as I said at the beginning of the show, it's only fun when the markets are going up. So, but the bottom line is that the newsletter this week is extremely important. It's loaded with very, very important information. You get an opportunity to not only hear what we think, but what other people think also. So the bottom line is that if nothing has changed in the markets at all fundamentally, and we got this pullback, if it was a good buy at 50, it's got to be a great buy at 35.
The telephone number to invest in precious metals, 1-866-623-2002. The website, wwpmc.com, 1-866-623-2002. To learn about investing in precious metals, receive our free weekly newsletter, the website, wwpmc.com. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on May the 6th, 2011. Our time is 9:33 in the morning Mountain Time. That's 11:33 Eastern Time. And don't forget, if you ever miss a show, you can catch us on Harold's website, HESradio.com, HESradio.com. If you'd like to learn about investing in precious metals, telephone number 1-866-623-2002, the website, wwpmc.com. The only company that Harold recommends is Worldwide Precious Metals, wwpmc.com, 1-866-623-2002. To learn about investing in precious metals, get our free weekly newsletter as well. In the first segment of the show, we had Harold on a hard line, and we were having a few problems with it. We've switched over now to another phone, so it's going to sound a little different, but it should give us a bit better quality. And we are at that point in the show where we talk about natural fancy colored diamonds. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. And go to rarecoloreddiamonds.com, take a look at the featured diamond of the week. Only one diamond in a million is over a carat. This is an amazing diamond that is the featured diamond of the week, 2.05 carat pear-shaped fancy internally flawless diamond. Pear-shaped diamonds are very popular. This diamond looks massive, huge, big. The color is beautiful, and it's a very rare internally flawless diamond. This is a winner as an investment and obviously as a keepsake that you could pass on from generation to generation in your family as jewelry as well. But Harold, what an amazing diamond you have as the featured diamond of the week, and people can speak to you by connecting with you at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or 1-800-432-1022. A beautiful yellow diamond.
Yes, thank you very much, Randy. I love that diamond. As you said, it's very, very rare to get a diamond over a carat that's flawless, let alone a beautiful 2-carat pear-shaped like this. The diamond absolutely sparkles. But the thing is about the rare colored diamond market, which is very, very important, is that it doesn't trade like commodities. There are no forced liquidations. There's no margin calls. The prices don't drop. There's so few of them available, especially of the caliber of the diamonds that we offer to our listeners and clients. That yellow flawless 2-carat is so rare, and again, it's internally flawless, and the color is just absolutely amazing. The beautiful thing about owning rare colored diamonds as an investment is that during times of high inflation, which we believe we're not only in now but heading into a much greater way, these diamonds do extremely well as an investment during times of high inflation. Back in 1979 and 80, when interest rates went to 20%, when gold went to 850 and silver went to 50 and oil prices skyrocketed, these diamonds went up 500% in 2 years because of high inflation. They're a very, very important asset to own, especially with the world financial markets the way they are today. Again, these diamonds never, ever fall in price, and the major reason for that is that there's so few of them. The demand is very high, but the supplies of them are very, very low, and very few of these diamonds ever become available. White diamonds are prevalent. There's many white diamonds. It takes 50,000 carats of white diamonds just to find one colored diamond. It takes 1 million carats of white diamonds just to find one pink diamond. That's how rare these diamonds are. In fact, in the last 15 years, there has not been a new mine discovered that produces any quantity of colored diamonds at all. So again, it's an asset that will just continue to grow and grow and grow. And these yellow flawless diamonds, they double in price every 4 years. They go up by about 25% a year. This year, because there's so few diamonds coming out of the mine, the miners are actually going to raise prices by 35% in the fall. So the fact is that in order to get a yellow diamond, there needs to be nitrogen in the ground. Otherwise, all diamonds would be white. But in the case of yellow and green diamonds, there needs to be nitrogen in the ground in order for a diamond to turn yellow. There needs to be boron in the ground in order for a diamond to turn blue. And the fact is that blue diamonds next to red diamonds are the most expensive diamonds in the world. So basically, these investment diamonds are so rare, and they do so well financially, and they never, ever fall in price. And with world financial markets the way they are right now, it's never been more important to own a rare colored diamond. Number one, it's the only asset that you can cross a border with that's worth more than $10,000. I don't know how many times I've walked across a border with my wife, and she's been wearing a $200,000 or $300,000 diamond on her finger and has never, ever been stopped. But try to carry more than $10,000 in cash on you and see what happens. The thing is that we're heading into the highest inflationary times that we have ever seen. And you want to own an asset like this because it's the safest asset, it's portable in private wealth, and financially it will do as well, if not better, than any investment that you can make. And there's no risk to the investment. So we recommend very highly, while you can still even get them, yellow flawless diamonds. Now, there's many different colors of yellows. We only recommend the fancy yellow, the fancy intense, and the fancy vivid. And there's many different clarity gradings of diamonds. We only carry internally flawless. So you want to buy a yellow, internally flawless diamond and put it away for the next 8 to 10 years. These diamonds double every 4 years in value. However, if we get the inflation that we're looking for and that we're very convinced we're going to get, these diamonds can go up as much as 500% like they did in 1979 and 80. In fact, a diamond you could buy for $20,000 could be a $100,000 diamond. And again, there's no risk to these assets. They're probably the most important assets along with precious metals that you could own during these extremely difficult and confusing times. So while you can still get them, if you look on our website, what we've been doing, because there's so few of these diamonds available,